A warm welcome to all of you to today's session of Your Market Navigator series. I'm Medha Budhia, and I have with me today Mr. Chanchal Khandelwal, who's a senior analyst and fund manager for a couple of our equity schemes, like ABSL Gen Next Fund, which is also incidentally the key topic of discussion today, along with other funds like ABSL MNC Fund and ABSL Special Opportunities Fund. So without further delay, actually, let me, start the ball, get the ball rolling and welcome to you, Chanchal. And
Thanks, Medha.
let's just start with, talking about, ABSL Gen Next Fund, which is by its mandate a consumption theme or a consumption theme based fund. But the way Chanchal manages it, it's pretty diversified in nature. It's a large cap oriented sort of portfolio with a fair mix of mid and small caps in it. And as far as the performance and the long term track record shows, it's pretty robust and comparable to the entire diversified space of equity mutual funds. So let me begin with the first question to Chanchal. How is a consumption theme-based fund? What are the degrees of freedom or the boundaries that you look at in this fund to start with, for the benefit especially of our viewers who have possibly not considered or tested this proposition in the past?
Thanks, Medha. Hi, everyone. Good evening. Thank you. To start with the fund itself, since Medha spoke about it, Birla Gen Next Fund is a B2C driven fund. By B2C, we mean that we invest in all the B2C businesses. Now, the theme itself is so good that we tend to invest in good quality, decent cash flow, throwing businesses. Now, if you see over longer term, the way we manage the fund is that we try and catch the trend early and try and play the trend with the fund, with the stocks in the fund. So we are spread across auto, consumer, banking, financial services, and even hospitals and pharmaceuticals name. Now, given where India is, I mean, I was just reading an article yesterday. Even by 2030, our average age, median age would be 30, which would be lower than the world median age today, which is 33, 34. So we have huge headroom for consumption to grow, and the theme itself will make sure that the way we manage the fund is that we try and have a consistency of performance, and we try and have a lower volatility. So anyone who is trying to enter into a mutual fund space, this fund is very well suited because the volatility is low, consistency is there. At some point in time, like last few days when the market correction happens, it's a good time to come in and invest in this fund. Also, I would say consistently having SIP would make sense in this fund. So that's the way one can come to participate in this fund. The way we manage this fund is that large cap orientation, all B2C businesses, catch the trend early and ride those trend. Normally, we tend to be a well-diversified fund with stocks in the range of 55 to 65. That's the kind of stocks we maintain. And we have a few stocks from all the themes. So that's the way we manage this fund.
Sure, Chanchal. So, consumption theme in a country like India with rich demographic dividend, rising per capita income, trends like urbanization, all are pro themes. For medium to long term, sheen of the consumption theme in itself. But Chanchal, in the current scenario where growth and even income is sort of divided or not uniform, and here I refer to the K-shaped recovery and the growth that we often talk about, and also in the backdrop of slowdown in consumption, the prospects of this theme, and how do you sort of manage your positioning in such a scenario?
So thanks, Medha. So if you look at the theme from a longer term perspective, let me give you an example of a retail. Today, retail is such a unorganized market, and all of us want to go to a modern retail or to a better store. So retail itself is a big theme, and 10 years from now, imagine yourself in 2030. all of us will have a huge amount of QSR. I mean, you can name it Burger King, McDonald's, Domino's, a huge amount of QSR chain there. You'll have huge people going to a modern retail and doing shopping. Everyone will have a mobile and will use mobile and do shopping from mobile. So digitization as a theme will catch up. Organized to unorganized will play out much faster. The urban consumption in the pandemic, we have seen the importance of home. People are spending a lot in home these days. People, instead of previously, people used to think, why do I buy a home? The yield is very low. But today, people want to own a home. They're spending a lot amount in beautifying the home. So home as a theme can be a theme for next decade. We would have seen some slowdown, specifically in last 2 years. I talk about it as a urban poor, specifically people who would have lost their job for some 6 to 8 months. A driver probably would have lost his job, or someone, they would have suffered, and that's the reason we are seeing some slowdown. But it's a passing phase, given where India demographic is, given where India aspirational level are. I think the longer term growth rate will sustain. You may have 1 or 2 quarter of pain, but that's the time which is a buying opportunity for good quality businesses. We have seen that someone who is a leader in this segment and someone who is a good quality company will tend to go through these phases, but will come and emerge much stronger. So that's the time you have to buy and strengthen the portfolio with these names, and that is the way we'll try and manage this portfolio.
Sure, Chanchal. Just to extend your response a bit, within this consumption theme, there are various sub themes that we like to talk about. Like you mentioned, digitization being one of them, unorganized to organized transition, low wallet share, in the consumer non-durable space, retailing. These are a lot of trends that we often discuss and mention. Which is the trend or are the trends that you're most excited about? And you think like, it's like that roke na rok sako type wala trend, that kuch bhi ho jaye, this will, play out.
Sure, thanks, Meda. I think, I can talk about themes across. So let's start with auto. I think that the EV theme has just started. I was surprised to read this number again. 11% of auto globally is already EV. That's a big number. Remember, 11% of global auto is already EV, is a big number. But I think the EV theme in auto will play out, and we will be able to, thankfully, will be trying to identify winner in that theme. So auto, this theme of EV, I think all of us 3 years from now, 4 years from now, if you decide to change a car, EV will be the first option to decide to change a car. Second big theme is the organized retail. Today, I don't want to go to there is importance of local kirana store. We realize the importance, but I think when we want to go out with family, with kids, we want to go to a modern retail, want to a better store, and we want to do a shopping there. So organized retail as a theme in India, organized retail is hardly less than 15%. So that organized retail is a big thing which will play out. The third theme is digitization. I mean, it's a matter of time, slow but steady. Number of people using mobile is increasing on a daily basis, and thanks to Geo, today the internet cost of internet in India is very low compared to global average. So people are getting hooked to a mobile and are shopping from mobile. So digitization as a theme is a big thing which will play out. That's the third one. Fourth one is that the modern retail and the big becoming bigger. I've already spoken about. One more big theme is the experience and travel and tourism. Now, with this is a theme which will play out now, because young people don't want to just go out for just go out for a holiday. They want to make the holiday an experience. So they will go for a better holiday. They'll spend time and indulge themselves in travel and tourism. That as a theme will play out. There are multiple other themes across sector which can play out, but these are 4 or 5 broader themes which excites me. As you rightly asked me, which excites me, which will play out in next few years.
Sure. So, Chanchal, just moving on a bit on the portfolio side, actually. So, like I mentioned earlier, the fund is a fair blend with a large cap and mid and small cap orientation, with of course the larger proportion being invested in large cap stocks. But yet, about 35% of the portfolio is in mid and small cap stock. And as we have seen that in the last couple of months, mid and small cap segment has, got beaten down a little much more as compared to the the other segment, and at stock level, of course, the correction is much more deeper. So in that context, how has your experience for your portfolio been, and how have you been able to manage this entire volatility bit that the market anyways has been going through?
Sure, thanks, Mira. I mean, it's been a difficult last 10 days, I would say. I was talking to someone say that in 10 days, things can change so drastically in the market. But that is what happened in last 8 to 10 days because of whatever geopolitical issue and geopolitical concern, market has taken a beating. And those are time we have realized that we have seen COVID happen 2 years back, or we have seen different scenario, but those are the time to buy and invest big time. I mean, in hindsight, if we see any event which has played out in our history and what we can remember last 10 years, last decade, last 20 years, all these are good buying opportunities. We can't time the market. We have to be someone, one of my college mates was asking me. I said, I don't know when to time the market. Once you can do a daily SIP for a month, why not? And then invest in market. As far as my fund is concerned, we normally have 60% in large cap, 40% in mid and small cap. We have across theme, right from consumer durable, retail, financial services also. I think as India economy grows, financials will play a very important role. So we are invested both in insurance, in lending and non-lending businesses, which will play out. I think the financial leverage will also help consumption. So that's the way we are exposed to this theme also. So financials also we are exposed to. So the way the fund thankfully is well diversified. We don't have B2B businesses. So we can't invest in infra, we can't invest in tech also. We can't invest in we were early enough to identify and invest in consumer tech, but a B2B tech which we can't invest in. But in spite of that, thankfully the fund because of the mid and small cap exposure tends to play out and over the longer term, and that's the way we manage it. As far as volatility is concerned, volatility is part of the game. You have to bear with it. But those are the time when you decide to strengthen the portfolio. You pick and choose your bets which you don't want to have it over longer term, and try and have bigger exposure to bets which you want to have it over longer term. But for good quality businesses, I'm okay taking the volatility, taking the hit of 15-20% if required. But if I know that this business is going to be a winner over next 5 years or next 10 years or next 3-4 years, but for small hit, I'll not sell those portfolio, but I'll rather keep it and strengthen it more at opportune time.
Sure. So Chanchal, by the way this theme works, it looks more like a domestic oriented fund. Correct me if I'm wrong on that. As in, the sectors and the key, businesses that you participate in are more, domestic oriented. So in this scenario where there has been, in the backdrop of a lot of geopolitical uncertainty and instability that we have seen, how good a stead are you in? How much does it impact a fund like this?
So the point is when the market corrects, normally all the businesses tends to correct. So that's the way market plays out. But yeah, some businesses correct much lower, and if some businesses buy, let me put it this way: that is the way to identify stocks where geopolitical risk is not there. Still, the stock could have corrected on the sentiment of the market. That's the time to buy those stocks and those businesses, if you like. So I emphasize a lot on the businesses. I'm on totally for the business. If I like a good business, I don't mind even paying a little higher price, but I emphasize a lot on what the business dynamics is. Is the business has a right to win over longer term? Does the business moat is strengthening over time? And that's when we take exposure on those businesses.
So Chanchal, I see that, of course, we've been noticing that over the last couple of months and even more than a year, where we have seen a whole chunk of IPOs coming in, and you have participated in many of the IPOs, and we see a lot of those names also. So what are the themes, sort of businesses that usually excite you, and what are the key metrics that you look at? And I ask this especially in the context because in lot many IPOs, I remember this debate being on the valuation front, on whether the valuations are as justifiable as they were launched at. So what is your usually take when you look at investing in these sort of companies?
Again, to start with, first we look at businesses. The business is good, and businesses can grow and strengthen over time. We look to buy those businesses. In IPO, normally you tend to get a little low allocation, but you strengthen the allocation or increase the exposure as and when you get comfort. So a few QSR names I didn't have exposure to, and I got exposure from the IPO, and I've increased my portfolio. The fund, as I spoke about, will like to have 55 to 65 stocks. At times when there are a lot of IPOs, you normally tend to have a bigger tail, and that's where the number of stock increases. But I'm okay owning the bigger tail. But in right time, you will actually reduce that tail and consolidate the portfolio. The valuations is a matter of, I mean, obviously in the IPO, few good businesses would come at a higher valuations, but you tend to buy that and then see when to increase the stake.
Okay. So what are the, if I were to ask you, say, three, four sectors that you are, super bullish on within the space, what would it be and why?
So one is for sure consumer tech. So consumer tech is a sector where we've seen few IPOs coming in. I think that's one sector. As number of transacting customers increases and the AOV increases, that sector can do well. The second theme which I spoke about, the retail, the organized retail as a theme, that can do well going forward. And I think retail as a theme can play out. Now in retail, what happens is globally we have seen that retail only good quality businesses survive, and it's very difficult today to tell which are the businesses which will do well. There is where I have a higher tail, and I think as we get more comfort, we'll increase the exposure to the right businesses. The third is consumer durable. I think the as electrification in India is increasing, as per capita income is improving, I think consumer durable as a theme can do very well going forward. So those themes may be impacted because of margin now, but I think it's a decent theme to be invested in. The last theme can be a home as I spoke about. People will now invest a lot in home, so home will be a play a bigger role and bigger theme going forward.
And within these themes and sectors, how do you see, within India, the segmentation between urban metros and, maybe tier two, tier three cities in terms of the demand that, comes from them, and the branded, outlets or the branded things that are there, and the unorganized setup that, where the demand is more in the tier two, tier three cities. How do you see that playing out?
Sure, Medha. One interesting trend is today I sitting here, someone someone sitting at tier two city or a tier three city or tier four city. With digitization and with way in world is developing, the aspirational level of the consumer in a city which is tier two or tier three or tier four is as high as aspirational level of you and me. I was surprised when one of our consumer companies spoke about that. Once the brand went online, the number of orders from tier two, tier three cities were higher than the top four metros. People there are earning as much and they want to spend. They don't have a place where they can spend on. So don't underestimate the power of consumption from a tier two, tier three cities. There people are as aware as you and me are. There people are as educated, and with education, the normal people can improve their lifestyle. So as education level and as the income levels in tier two, tier three cities are improving, they are also spending a lot. So I would not differentiate anything between how and when tier two, tier three cities. It's not a matter of whether they want to spend. It's a matter of when the brand will reach them. Today, Tanishq is. I mean, Tanishq from Titan is would be in 250 plus cities. A Jubilant Footwear would be a Domino's store would be in a 400 cities. A Manyavar store would be in 200 plus cities. And when you talk to Bata would be then 800 city. So when you talk to all these companies, they are saying that India and a Maruti showroom would be in some 700, 800 cities. So when you talk to all these companies, they spoke about that India, at least 1,000 cities can take up all this brand. That means that till 800, 900 cities, they can still go on expanding, and everyone there want to increase their lifestyle. All of us are working hard to improve our lifestyle, right? And we want to consume better. So that is where it is. And as India uh, as manufacturing sector in India grows, as agriculture in India grows, as people earn more, they want to spend better and spend more, and that's where this story will play out.
Sure, very pertinent, Chanchal. And in this context, and what is your view in the the strength of the supply chain management, and how is that evolving to support this? So, like you mentioned, when will the brand reach them? The economies of that. And here I would also an add a follow up would be like your view on the e-commerce segment. So metros of course here enjoy an advantage in terms of the logistics cost that e-commerce companies have to take up, and as compared to that the other parts of India. How would you rate that?
Sorry, I missed your question, Mega. Can you repeat?
Yeah, so I mean that in the context that you just mentioned, how do you see the supply chain dynamics then evolving? Are they growing at a similar sort of a pace to support the demand that comes from the different nooks and corners of India?
So interesting question. So only few days back, I met a company who is planning to do IPO in the consumer tech space, known as Delivery. There are multiple other companies who have built up logistic business in India. I think logistic in India is evolving big time, and you will see that story play out. India still logistic cost is highest in the world, but today because of the quality of road or quality of infrastructure we have, but there are a lot of companies who are working on improving the logistics. And today, most of the big ports in India, the companies like the e-commerce company like Delivery or Ecom Express or Pizza would be able to deliver. They're building up the back-end infrastructure in logistics in such a way that they'll be able to satisfy the aspirational needs of the for customers. The supply chain, I think it's a matter of time. India is the amount of spend we're happening in infrastructure, both rail, roadways. I think the it's a matter of time that India will the logistic costs will go down and companies are preparing themselves to address to the supply.
Sure. So Chanchal, just I already see a lot of questions which have already started coming in the Q&A box. So my last question to you before I start taking that up is, what are some of the key USPs that you would want to call out to within the peer group of this fund? What are some of the unique things?
Sure. So let me start about. So we have a decent exposure to. So the way we look at this fund is that we normally don't benchmark with the we normally tend to play on the themes and on the broader view we have on the market rather than looking at just the broader beating the indices which we are following. That's the first one. That the basic idea is that we tend to play on the companies, on the businesses which we like, and we take exposure in that rather than just looking at the benchmark. The second thing is that we normally tend to have a higher financial exposure, both banking and lending business and non-lending business. I think that can be a big game changer going forward as India progresses. The lending businesses will do well, and also in the non-lending businesses, the penetration is very low. I think that's a big theme which we have exposure to. The third is we being more diversified helps in making sure that the volatility in the fund is lower. We can choose to at some times we do take concentrated bet, but we are more diversified than few of the competitors, and that normally helps. And lastly, the returns we tend to have a mix of large cap and mid and small cap, 60-65% large cap and 30-35% mid and small cap. So that's the way we maintain the fund.
Sure. Thank you for your insights, Chanchal. I'll just start with, taking some of the questions which are there in the Q&A box. So Mr. Manish Shah asks, don't you feel consumer tech companies are recklessly burning investors' cash? You think 10 years down, they will survive? There is hardly any moat in their business model.
Sure. So to Mani's question on the consumer tech companies burning, yes, they are burning cash, but we look at companies from a unit economics. We look at the unit economics of the company and whether the unit economics justify them and whether they will be profitable from the unit economics at this point, because most of these consumer tech companies are trying to spend to acquire consumer, and that's where they are burning. So few of the companies we own, we believe that the unit economics is superior, and as the number of transacting customers will increase, their operating profit margin will improve and their cash burn will reduce. Few of these businesses will survive 10 years from now for sure, to your answer to your monies, and we will be the first one to touch wood, try and identify and invest in those businesses.
Okay, so the next one, Chanchal from Suraj Jatwani. What's your view on banking and financial sector? Because you have HDFC, ICICI, SBI Life, Axis, Bajaj Finance, etc. in the portfolio. In short, will the fund show negative return due to Russia-Ukraine war?
Again, I don't know Russia. The geopolitical concern is there for sure. I don't know how will it is play out. The time will say whether the worst is behind. But these are the time to invest in the fund, and these are time when you have to sail through the storm. The way we always believe that in tough time you sail through the fund and invest more, because that's where the bigger return will come over longer term. We do have exposure to financials and both lending and non-lending businesses, as I spoke about. But I'm very bullish on these businesses, and that's where we own it. But I think there is a concern on geopolitical. Yes, there is a concern. The oil has gone above $100, but I think this is a matter of phasing of time. I think things will become better going forward. So the exposure is there on the banking, and that will remain.
Okay, this is actually a follow-up question also from Mr. Suraj on what's your view on future inflation, and do you think that the fund return will moderate or become low due to margin reduction in FMCG and growth in auto sector is something that he writes. And before that, he's also mentioned that the valuation concerns on both these sectors, FMCG and auto, the valuations are high.
Sure, Manish. I mean, valuations were always higher in this. So jokingly, someone tells me, I mean, the way to look at this, Manish, is that these are good quality businesses with good cash flow. So in 1 year or so, the reason I have a higher tail is because, the businesses may not perform 1 year or 2 year. But if these are good quality businesses, they normally come back. So that's the reason I have a higher tail in the portfolio. To give you a different context, if someone, whichever city you are from, if you were to buy a home in the best quality residence, you have to pay a price for it. So within the consumer company, if they are decent cash flow and decent cash generating businesses, you have to pay a price for it to buy. The inflation may hurt them, but these consumer companies tend to have a pricing power and come back. So that's where it is. We do navigate the portfolio and book some profit, partial profit, where we think that the valuations doesn't justify. But short-term hiccups because of higher crude prices, higher raw material prices may be there. But that those may be rather opportunity to buy these good quality businesses.
So another question that we have, Chanchal, is what is your view on the alcoholic beverage sector and hospitality sector, and also on medical tourism as a sector?
That's an interesting question. So those are few themes I'm bullish on, and that those themes can play out in next 1 year. What has happened in last 2 years? All of us were sitting at home, working out of home, and we all want to go out and travel and spend a lot. So I think this theme of travel and tourism and will play out, and this aspiration of drinking better, people have realized will play out. In India, drinking was always a sabotage, though things are changing now. And even the state government have realized that how important liquor is as a contributor to their exchequer. So liquor as a sector, all the state governments started with UP, and now a few other state governments has followed. Home delivery of liquor is allowed in a state like Bengal. You would never have thought so. So people in the state governments have also started opening up. I think this theme can play out in next decade. Travel and tourism can also be a good theme because we all want to go out and spend. So I'm very bullish on both these themes.
And the third theme was medical tourism.
Medical tourism is interesting. Medical tourism again, the health tech will also play out. We have exposure in medical tourism also in our fund, uh, uh, through few hospital stocks and diagnostic stock. Yeah, but I think medical tourism as a theme will play out. India will play a bigger role, has always played a bigger role in medical, but I think more than that, company who is able to identify and attack health tech will be a bigger winner. What do I mean by health tech? Someone today should be able to know who am I. Now people will have my database. They will have whatever test I've gone through in last 5 years, whatever medicines I've taken in last 5 years, and they'll be able to advise me a better medicines going forward. So people are building up system as we speak about, and we will see few IPOs also happening in this space, and we'll hopefully be able to identify the winner in this health tech space, and medical tourism will be a part of that.
Sure, Chanchal. So there is a question from Mr. Keval Jetty. Young generation invests in equity market through SIP, and possibly what he means is less of bank FDs. Then why does the fund not have a single AMC share or CDSL BSE like stock market players?
Sure, thanks. Whoever the gentleman is, I forgotten the name. So you have been able to identify
Mr. Keval
one or
Jetty.
few. Yeah, Mr. Cable, one or few themes. So you would have to love to have those themes. So one of those themes, if you don't have it, but at right point in time, we need to buy those themes. I think that saving. So as I spoke about, there are three part of the theme. One is the leverage, which is the banking sector, and the other is the non-banking sector, which is insurance and probably saving as a theme, mutual fund, etc., which we can look to identify buy in this stock. But we are playing that theme through banking, where few of the banks still own mutual fund. So those SOTP plays out in those banking stocks which we own.
Right. There are two questions, Chanchal. One is, doesn't any IT stock qualify in the B2C segment? And how does having a cigarette company justify in a Gen Next sort of a portfolio?
So both are interesting questions. So IT theme doesn't classify in. Of course, I spoke about consumer tech. They do classify in the Gen Next, and we own decent amount of exposure to consumer tech company relatively. So we were early to hold to those theme, and we are scaling up portfolio as we find value in those. On tobacco names, of course, tobacco is a decent cash flow generating businesses, but this tobacco company is moving on to the FMCG business, which will play a bigger role. It's a decent cash flow generating business, and the hotel and tourism also they have exposure to, which can play out. So it's more about how the SOTP story play out rather than just the tobacco business which we own it. Tobacco business, of course, is a decent cash flow throwing businesses, but I think with the globally people getting more focus on the ESG theme is the reason people don't like this cash flow throwing business. But I think the way they are building up the other businesses, it's a matter of time that story can play out.
Sure, Chanchal. There is, I know this question would be a little, so how Gen Next is different from our manufacturing equity fund? And how much one should allocate to this fund when it comes to taking tactical call?
I would say 100% allocation to Gen Next. Manufacturing fund doesn't have a financial sector exposure. Firstly, manufacturing fund can take metals and others exposure, so volatility can be higher. In my fund, in this fund, we don't take B2B business as I spoke about. So we don't have infra, we don't have metals, and we also have banking. So that's the reason the fund is different. Manufacturing, of course, with the PLI scheme, with the way things play out, that fund can also catch up. I'm not saying that the fund will uh, fund is very well suited, and we are the only few fund houses who have manufacturing fund. I think if the PLI scheme and if the way India is moving to manufacturing it plays out, that's a good fund to own. But if the India young aspirational story from a longer term perspective with low volatility is what you're looking at, this is one of the best fund to own.
Chanchal, another question. So if you were to bifurcate your portfolio between cyclicals and domestics, and in terms of running that cyclicality part, I'm sure then how would you bifurcate and how much would you allocate to these segments?
So we do play cyclical stocks. So we had exposure to a real estate company, or we still have exposure to few real estate company, but to a residential real estate we had exposure and we got out thankfully at the right time also. So we do play some cyclical stocks where we can see a B2C businesses owning. But the idea is to have play the cyclical and get out of the cyclical names as we see you turning around. We do play cyclical stocks, but cyclical as a percentage of the entire portfolio would be always less than 10%, in the range of 10 or 15% max.
So in that sense, while maybe this fund is categorized as a thematic fund, but then the characteristics are more like say usually because sectoral and thematic funds are assumed to be more aggressive as compared to the diversified set of funds. So isn't the orientation or the risk profile more towards diversified funds than thematics or sectorals?
Rightfully said, Meda. And in fact, that's where it is. So, in fact, most of the people who think this as a thematic fund normally tend to not invest in this. But if you see a 3-year, 5-year, or even a 10-year long-term performance, the fund normally would do better than diversified, if not as good as diversified fund. Though at some point in time, I remember 1.5 years back, the fund had a difficult time. Those few sectors were doing well, and I could not have taken exposure to those sectors. But over longer term, it averages out, as you say that the law of averaging play out, and the fund catches up because we tend to pick up the winners in the business. So if you always identify, again, the focus for me is to look at business and business. If the business is good, valuation calls may go wrong, but normally the theme or the business will come, and business will do well over longer term. So that's what we keep looking at. If the business is right, even if I buy a little expensive, over longer term, it will play out. So idea is to identify the winners in the business, and over longer term, which can be a decent business to own, where the moat in the business is strong, who is strengthening the moat, who is able to identify and strengthen. Moat can be different thing. A brand can be a moat, a supply chain advantage can be a moat, bigger scale can be a moat. It can be different thing, but you have to identify which moat you are playing for and catch up those team and own those teams.
Sure, Chanchal. Uh, Possibly one of the last questions that I see right now in the chat box is how about the future of the gaming theme? Companies like Nazar, etc. On so what is your view
Nazara.
on that? Nazara, I'm
Nazara is
sorry.
the company. Yeah. No, so gaming can be a decent theme. Whoever has spoken about India, the demography is best suited for gaming as a theme. We'll see a couple of listings happening here. We will hopefully be able to identify who the winner will be. But we have an eye on this theme because I think, given the India demographic and given what's happening in this theme globally, it's a matter of time this thing will play out in India also, and we'll see a couple of new listings also happening in this space.
And how about the online music and platform? What is do you see any prospects of that also? There are few players out there, of course. So Saregama, Shimaru, or something. How do you see that platform emerging?
So that platform is also interesting. So as I spoke about, all this to play in consumer tech, those themes are emerging in India. But I should say I'm more bullish on the first theme than the second theme. But both themes can play out because second theme, it's still available for free. Lot of music is still available for free in India, and I don't know whether people will continuously pay for it or how that business will evolve. So you have to see, a matter of fact, how this business is evolved, and that's where we'll decide to take our exposure. But yeah, these are few themes which will play out, and we'll try and work on identifying which theme and which company can be the winner in this theme. So that's the job we do on a regular basis.
Sure, Chanchal. There is another question on war from Mr. Krishna Karthik. Is there any chance that Russia-Ukraine war can lead to a nuclear war? And what are the
Well,
changes that you expect after the war?
it's $1 billion question. Even all the global political leaders are trying to find the answer to that. I don't know, have an answer to that, but I believe that will emerge much stronger. I think this will settle down in some form or other. I don't know what it will be. But all this uncertainty, market doesn't like uncertainty, and that's where the valuation gap comes, and it's a pendulum which swing both the side. When it swings on the other side, you should be ready with your money to deploy. and that's where market gives you opportunity, and you will find over longer term you would have been better deploying money rather than thinking about the outcome is very difficult for you and us, all of us to, we can just चाय पे चर्चा जैसा कहानी है, हम चर्चा कर सकते हैं, बट अंत में हमें नहीं पता क्या होगा. That's where it is. You should be investing. Keep identifying the levels where you want to invest. Someone was also, I read somewhere in the Q&A, someone was trying to ask, can I do a daily SIP? Yes, you can do a daily SIP also. Daily SIP also is possible to do with funds. You can do it.
Any
So
day
that's where it
SIP
is.
is actually possible, Chanchal. We do not have a daily SIP facility right now, but yes, any day SIP is available. Weekly SIP is available. And
Any
of
day
course,
SIP is a
monthly.
daily SIP, na, Meda?
Any day is that there are, earlier we used to have 4-5 dates. Now you can invest on any day. Any
Yeah,
day
so
you
any
can
day SIP is a
choose.
daily SIP. I can choose to invest every day,
No,
na?
no, we do not yet have a daily SIP.
Okay. Okay. Probably they'll implement that shortly.
Yes, we are definitely, even considering that, and hopefully we'll be able to, open up that facility also sometime in future.
Meda, few of the people have raised hand. I think they should be able to type their questions. That's
Yes,
better.
I would request all the participants who've raised hand to, type your questions in the Q&A box. So, Chanchal, there is a question on the telecom sector. What is your view on that?
We are constructive in the telecom business. I think we don't know whether three guy will be there, but I think the winners will be able to raise the tariff and make a decent amount of profit. So I think we own telecom business in our fund also, and we are constructive in the telecom space.
Sure. And the question from Mr. Nikhil Shah is that what is the future outlook for the mid and small cap category, according to you?
So again, the mid and small cap, I was again talking to someone who spoke to me that small cap index is down from 12,500 to almost 9,500. It's a decent 20-25% correction. I'm constructing on India as a theme because with the way we are positioned and way the government is running and focusing on various manufacturing as a sector, agri as a sector, infrastructure as a sector. I think India is going to be a different India 5 years from now, and we are well placed on the various emerging market. So when I'm more constructive on the broader macro theme, I think mid and small cap is where bigger amount of money can be made, and we've seen a decent 25% plus kind of correction in mostly all these themes. So all these mid and small cap portfolio. So it's a good time to start investing again in this mid and small cap also.
Yeah, and an extension of the banking space is the PSU space that Mr. Narayan Bhattar wants to know. What's your view on the PSU banking sector?
It's an interesting question. I think so. What happens in this? What has happened in last 4-5 years? If you see, most of the banking theme has taken a hit in terms of the NPA recognition, and so has PSU theme. When the credit cycle starts, which we'll see this start of the credit cycle, that's the time you see a huge amount of growth and a lower credit cost, and that's where the theme does well. And even these PSU theme participates. But over longer term, I think private banks is where I'll be more bullish on. One can play it as a theme for next 1-2 years when the capex cycle will play out, and most of the banking would have already recognized their NPAs. But over longer term, I think it's a theme you have to play out and get in and get out as fast as you can and make a decent money. But I think my view is that private sector will be winner over longer term. So one should be invested in the private sector itself.
Another question that I see is infrastructure sector and value fund. This is the right time from big buying position or from lump sum investment?
Again, the infra and value funds. I mean, I'm bullish, more constructive on the market, and I think market. There are some school of thought that market value theme may do well over next few years. So from that perspective, just by buying value without a growth will not do well. So I think if there's a growth also, I mean, I believe in buying growth at, and we as a fund house believe in buying growth at reasonable price. But value theme, there are a lot of value money to be made in the value theme. The theme can do well. Infra is a theme also, given where government is and given the huge spend on infra. I think the capex cycle is just starting. So both these themes can do well from a 3 to 5 year view. But again, you have to be very careful in these themes. When you're investing in themes, you have to get in and get out at the right time. The only advantage of the consumption theme, which we spoke about, is that it tends to be not as cyclical as the other themes.
Sure. Thank you so much, Chanchal, for your valuable insights. And I would also like to thank all our viewers for actively participating in this session. And we look forward to your support and participation going forward. With this, I would, like to end today's session. And
Thanks a lot, everyone.
in case there are any questions that we have missed out, you could always reach out to your relationship manager with, and send those queries to us. And I'm sure Chanchal would be happy to address.
Thank you, Medha. Thank you, everyone. Happy investing.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।